If you've ever seen the first day move in an IPO and thought, I wish I'd been included in that, then you need to watch the rest of this interview. Joining me today is CEO of Retail Book, who are here to power inclusive capital markets. James Deal, very good to have you in.
Good to see you, Rich. Thank you.
So take me into exactly what Retail Book's trying to do for investors sitting at home.
So Retail Book is a platform using our in-house technology and deep partnership across the industry. That's with every bank, every law firm, every advisor. And we connect with companies directly to try and make sure that whenever a listed company goes cap in hand to raise money, we make sure it's open and available to all investors, not just the big institutions. So we put the offer out to the public, to stakeholders at large, including customers, employees, but of course the public, to give them equal access to the opportunity.
And has that opportunity been around for a while, or is this a real step forward in giving power to the masses?
We, as a team, led the charge on this. COVID was big for us because so many companies needed to do exactly that, to raise capital. And the first FTSE 100 company to do so was Compass Group. They raised just under £2 billion in 2021, and we put a retail offer out to the masses and delivered on that. And we've been on pretty much every FTSE 100 and FTSE 250 transaction since then, and it's been an evolving process. So yeah, it's about 6 or 7 years in the making.
Okay, so it can include rights issues, capital raises, IPOs, any kind of form?
Rights issues you don't see very often, but in terms of your typical transaction, what's great is because we can reach investors from every corner of the UK through our distribution partners and network, we are doing a very good job of replacing the open offer or the rights issue, giving equal access to both existing shareholders, but of course non-shareholders too.
And I saw a great interview recently. Lucy Rigby was one of the talkers at one of your events. Of course, the economic secretary to the Treasury.
Yes.
And the message that she had was so positive for getting people across the country more interested in investing and also securing their financial future. How do you think Retail Book plays a part in that journey?
So we've got a really obvious, very precious opportunity in the UK right now because the UK market isn't as broadly owned by individuals as you find in other nations, particularly the US and even across Europe, you know, where the average, in the Nordic region, it's close to 20% of shares are owned by people. Wow. In the UK, it's less than 10, and there's scope for that to rise. And alongside that, we've got a real need and desire from across the industry, to your point, the Treasury, the regulator, and the exchange, for retail investors to become a much greater part of that equation. As Retail Book, we're pretty unique in our ability to deliver access to the fundraising. And so what we see is that primary capital, that's companies raising new money, is a very good catalyst for companies being able to connect with investors and broaden the ownership of the business at that point in time.
I was lucky to be in a talk from Dame Julia, London Stock Exchange as well, and her message was exactly the same. One of the main objectives that she had when coming in was to drive the opportunities for retail investors. So it sounds like you've got backing from all sides.
We've worked really hard to partner, as I say, with every bank that's advising companies, with every law firm that's doing the same. We work very closely every day with London Stock Exchange and indeed in partnership with all advisors that are helping serve UK public companies. But we're also, it's not just about equities. We're doing this in the bond markets and ultimately in private markets too, which we may touch on. But in terms of, any given company that's got both debt on the balance sheet and also an equity base, we're there to give a much broader base of investors access to both sides.
And let's walk through the actual process then. How does someone listening to this now get involved? What's the first thing they have to do? And then once a deal comes up, what happens?
If you're registered with Retail Book on our notification service, then you'll receive an email when a transaction goes live. So this morning we announced a transaction for Rosebank PLC, right, which we can come back to. But we'll alert you to the transaction, or you may hear about it because you're an IG customer or indeed one of the other platforms. And increasingly they are pushing our transactions out to both shareholders and non-shareholders on their user base. Okay. You transact through your broker, so through IG. and your demand comes into the book, we represent that and go in to the institutional process as one line of demand representing underlying thousands of individuals.
And is there a sort of set allocation for you in particular, or for retail as a whole, or is it just the quality of the book?
It's all about the quality of the book and the distribution. And, you know, shareholders come in all sizes and durations, and that's true whether you're talking about the largest institutions all the way down to an individual investing as little as £250.
I think that was one of Lucy's points in her speech, that one person sitting at home, you know, Gladys from Blackpool, can't make too much of a difference by herself. But once you get all retail investors together, it does actually, it can drive a valuation. It can, even down to votes at the AGM. But it starts to matter when you put all the retail investors together, doesn't it?
That is exactly right. So there is a lot to be said for the power of people en masse, if you like, working collectively in the interests of you know, investment and ownership, and identifying an affinity to brands or companies. They either see the investment opportunity or they just want to own a piece of a business that they are close to.
Now, as CEO of Retail Book, I'm guessing that you've had some experience in the field yourself. Would you like to let everybody know what your background is?
Sure. So I spent 25 years broking UK equities. I started at what was Dresdner Kleinworts many moons ago. I spent 15, 16 years with JP Morgan Cazenove running their UK business in small and mid-cap equities. And it was around 2018 I noticed that you know, too many share prices were dipping into the close of the year because electronic trading systems were taking risk off the table. And into the Q1 of 2019, you saw the opposite happen as risk came back on again.
Wow.
We allowed our marketplace to step to a place where there's not enough human ownership or interaction in shares. So ironically, as a platform, Retail Book is there to use technology to help put humans back into the market.
Right. And during those years, just take us through maybe a couple of the really exciting deals that you were part of. I had the good fortune or misfortune to be one of the traders involved in the IPO of Glencore. So at the time, LSE's biggest ever IPO, and of course it was absolutely awful. It opened at £5.49 and it stayed there for about 2 minutes, and then I think within 3 days it was at £5, and only twice has it managed to get back there in 16 years, and one of them involved a bid from Rio Tinto. So what about in your world? What's been particularly interesting on the deal side?
If you take a step back and you look at public equities at large, you know, they are the best performing asset class bar none. That's the statement, you know, that rings true with data across the globe. If you then within that look at companies raising new capital, it's typically done at a discount when a company's on the front foot and they've got reason to move forwards. So what that means is getting access to that fundraising moment is a great way of outperforming what is already the best performing asset class. Mm-hmm. And we work in the world of moderation. We're not saying that individuals should put all of their wealth into a single company or indeed into the equity markets. But it does sit squarely in anyone's portfolio of, you know, generating the right risk and reward in terms of profile of returns. If I look back over the last 6 or 7 years of, you know, this battle of putting the individual retail investor at the forefront of capital markets, we've had plenty of frustrations, but plenty of really good moments. As I say, Compass Group was the first FTSE 100 company to do so. We've been on almost every FTSE 350 trade since then. It includes companies like Taylor Wimpey being the first company to put an offer out to its employee base, which we now see is quite commonplace.
Right, and take us through that then. How do the employees come into the picture of the company?
So we will work with the company to market the transaction to its stakeholder base, which could be a customer, it could be the employee, and of course it's the general public. And then we hold the hand of the individual to come back through their broker, chosen, you know, partner, to be able to participate in the transaction. And so whilst we're doing that all day, every day with existing listed companies, we of course work hand in glove with advisors and companies when they run an IPO. Mm-hmm. And so if you look at last year, in quick succession, in October, November last year, you had the Beauty Tech Group and Shawbrook Bank and Prince's Group all went public. we ran the retail offer on all three of those transactions.
Right. And on how many occasions do you see an investor actually get the allocation that they went in for? Or is it a kind of process of scale back? Or do some not manage to get any and others do?
At the end of the day, what's important is that we're giving the individual a fair allocation. That means they're getting the equivalent allocation to the largest investor, the big institutions, just as readily as being the smallest. Historically, to your point, retail has been shunted to one side and not seen as a worthy pool of capital. What's important is it's not just us flying this flag today. It's well understood that actually a happy share price comes from having that diversified register, mixture of buyers and sellers. But increasingly what we're seeing is advisors and companies recognizing that having the right proportion of your register in retail hands is how you can deliver positive liquidity and good price realization in terms of where the true value of the business is. If you look at a company like Rolls-Royce, which has seen a fantastic recovery, it was retail investors that kicked off that recovery in the share price. Yeah. And that's a good example, again, of where the right balance of ownership is what matters.
A good deal, a good number of them that got involved in Rolls-Royce at £1 and under £1 actually are viewers of the show. I think it must be their favourite stock. And actually on the IG advert, which just recently went out, their first television advert, we managed to get Rolls-Royce as the top stock in one of the clips of the lady's phone who was an IG client. And it just shows you, we put that ahead of Alphabet, of Nvidia, because it really is, it's a UK success story now, isn't it, Rolls-Royce?
Absolutely.
So take us forward then. What are your expectations over the next few years? Where would you like retail book to be given the right path?
We've seen a pretty inactive market for a number of years now, but that is changing. If I look at the pipeline of companies that have selected London as their venue to do an IPO, it's really exciting. And we're going to start to see that play through this year. Separately, what we're also seeing is companies on the front foot recognizing there is opportunity to grow and going cap in hand to do so. Right. So this morning, the announcement by Rosebank PLC looking to raise £1.9 billion as part of a £3 billion transaction of two US businesses is a really good example of a UK listed company currently on AIM raising capital to grow and buy appropriate assets in the US. This is the same management team that previously were founders and created Melrose PLC.
Wow, okay. Right, so strong management team and quite an interesting deal by the sounds of it. Is that compared to their market cap of recent times, how does that 1.93 billion?
It's sizable compared to the current market cap, but when you look at their track record of buying assets of that size and then, fixing and selling in due course, delivering outsized returns to shareholders, both big and small, they've got an incredibly strong track record.
So it could be a transformational deal, and this opportunity now comes to UK investors via yourselves. How would they get involved in that? Is it the same way as you described?
Exactly as described. So the RNS, the news service update is out in the market today, and we're working with our distribution partners to make the broadest audience of both existing shareholders and potential new shareholders coming in aware of the transaction, and that is open until some point tomorrow, depending on how quickly the books build. We may have to close early, but otherwise that gives ample time for investors to assess the opportunity and then invest.
And what's the ticker of that? And so what's the ticker for Rosebank, just in case anybody wants to take a look?
So the Rosebank ticker is Rose, R-O-S-E, space LN or .L. The shares were at £3.36 undisturbed, and I believe the announced placing price is £3.30.
Okay, wow. And so a $3 billion deal and to raise 1.9. So that's one example. Is there anything else coming up soon in the pipeline?
It's a really opportune moment for us to connect. Delighted to speak to your broad audience because, as I say, putting aside geopolitical concerns at the moment, we see a very good, very healthy mix of companies looking to go cap in hand and raise capital for growth. That's existing listed businesses. So I expect we will see in coming weeks and months a lot more activity. And then behind that, we know there are some really fantastic businesses that are looking to London as the venue of choice to go public, to do their initial public offering, the IPO.
Fantastic. And then with regards to the debt markets, what kind of debt deals have you seen so far, or what do you expect in the future?
So the two other areas we operate are fixed income, so debt, and also private markets. On the debt side, we are working every month to place government treasury bills, T-bills, into the hands of the public because they represent a risk-free, or what is seen as the risk-free rate because it's government paper, at circa 4% or just under at the moment. And we've seen demand for that rise every week, every month that we operate an auction.
Wow.
It's really good because it shows just how, to your point earlier, how powerful the UK investor can be. If we're delivering between 100 to 150 million pounds of demand every month, that I think is testament to that agenda. And then in private markets, we are working very closely with the regulator, with London Stock Exchange on the launch of PICES, which is a mechanism for secondary trades for companies with very, very good profiles to sell existing shares from existing owners into new hands. And so we've recently launched the first PICES transaction, which is for investors to get access underlying to a company called Oxford Science Enterprises, which is the commercialization vehicle for all IP coming through Oxford University, which is quite unique.
Wow. God, that's interesting. And then that also helps employees at those companies as well, doesn't it? Much the same as you mentioned before.
Absolutely. So what we know is, allowing a broader base of investors, whether they be employees of the company or indeed the general public, to help back businesses in the UK, that in itself helps them grow, which is good news for the overall growth of the UK economy.
Yeah. And then in the listed ones, definitely preferable to have retail investors rather than those hedge funds that will knock it out straight away.
At the end of the day, it's all about the right balance. But what's interesting is it's widely understood now that retail investors can be some of the longest term, most forward-thinking investors with full information, more so than, to your point, a lot of the noise or the liquidity provision that comes with some of the institutional investors. That's true.
Now, you've just done a deal with IG. Take us through how that's set up.
Not so much a deal, just a partnership. And so this has been something we've been working on with IG for many years. Given what we see in terms of pipeline of transactions, it's wholly appropriate that we connect directly with IG Group to give your underlying customers access to what we see in terms of equity transactions, fixed income, and potentially private markets too.
Okay, and once again, what's the easiest way for investors to be notified about the deals coming up?
So one of the easiest ways is to go onto our website, that's the Retail Book website, and sign up to our news service, our subscription news service, because we will keep every investor in touch with deals the moment they launch. And then, of course, demand should then come back through broker, IG in this case, but delighted to keep the broadest base of investors aware of transactions to give that access to the information and the timeline of every deal.
Excellent. Right, I'm off to sign up now. James Steele, thank you very much for coming in and looking forward to watching the progress of Retail Book in the future.
Rich, thank you.